Hey everyone, this is a trader investor. In today's video, I want to talk about pullbacks when it comes to divergence, convergence, and when you see indications that markets could be extended and they want to take a pullback, and we don't know the depth of the pullback. And very, very important to understand this. And today's price action is case in point. So in yesterday's conversation, when I mentioned that we have a divergence, meaning price is going up and oscillator is going down, I said a potential pullback could be heading our way. And I will zoom out a little bit because those cycles repeat all the time. And you can go back to any chart and you'll see those cycles repeat. When you see divergence, price pulls back. When you see divergence, price pulls back. Now, we never know the depth of the pullback. What happened, for example, a few days ago, when we reached here, price pulled back momentarily, but immediately reversed, and that divergence continued. You will see that dip reversal here in any oscillator, but the divergence still continued because we didn't make new highs. Even though price made a new high, the divergence, the oscillator did not make a new high. So it was a sign that we are not yet fully out of the divergence zone. And as a result, you saw price continued to drive down. And so in today's price action, and what I mentioned yesterday was, when you see this divergence, you do not know the depth of the pullback. So just be cautious, and it's not a sign to say hurry up and go short. That's not what it means. It just means if you have positions to the long side, because we trade with the trend and the long-term trend is up, because the long-term trend is up, we want to make sure that we're taking profits or tightening stops in these levels. And so today we saw that very clearly, that there was a pullback, but price reversed immediately after that. So what that means is for us to be cautious when we're in this zone. And then again, when you see price makes new highs again after this dip, what you see is this dip here, but then the oscillator continues to make lower high. So this says, again, similar to this, Monday morning, we could gap down. We could continue to push up like we did here. It took a few days, a dip up and then down. We could continue to push up before we dip down, but it says be cautious. And where did price take us? So yesterday, when we had the pullback, very important to see, when we had the pullback, we created, when I say we, I mean the market overall, created a supply zone. On the 1 hourly chart, created a supply zone. So what price did today, if this was a deep pullback, it would have rejected this supply zone. Price would try and reject it, try again, continue to reject it to go down, because my entry for long before I enter long is either this imbalance or this 1 hour demand zone. I'm not at a demand zone. That's an area of value for me, so I'm not entering yet. Just because we are, we have this divergence, we're at the all-time high, so I would just want to be cautious. So as you look at that, what it means is, if price had stalled here, you could have said, maybe another deeper pullback is coming. But price actually broke through the supply zone, and an uptrend is expected. There is no heavy supply sitting there. There's no big institutions waiting to take the market short. There are actually not any positions here. There could be a few, but not significant enough compared to the overall volume. So those short positions were not able to take price down. There could have been some profit taking. There could have been some short buyers who got caught on the wrong side. But overall, the market rejected the supply zone and continued to push up. Keep in mind, we have I just want to stress this out. We have this continued divergence. We had this dip, but this dip is normal, because as long as this is continued, we're not out of the woods. When we are out of the woods is when this does this and price does this. We're in convergence, meaning they're moving in the same direction. When as soon as the divergence is over and they converge toward the same direction, then we can say we're out of this overall position. But for now, that's not where we are. That's not where the market is showing us. So as a result, we just want to be cautious. So this is why I kept pointing out to you this last couple of days, very, very important, extremely important, that you manage this trade according to what the charts are telling you, not according to what you desire or what you want, according to what the charts tell you. The charts have been saying divergence. They've been screaming divergence for the whole week, and today they just said, hey, I'm gonna give you a price pushing up, but I'm not ready to get out of this divergence, so extreme cautious. So this is how we are setting up. That's why I just keep stressing out. So for me right now, my area of value is this imbalance or this demand zone. When price comes to one of these zones and gives me a confirmation it doesn't want to go any lower, I can enter a good long position and I can target these highs. Now this supply zone is no longer valid. There is no supply zone here. It is no longer valid. So my target would be, first sign of trouble would be these highs. That's what I would be looking at. So hope you had a great week. This has been good for me, and I will come back next week for more of this SPY trading instruction. I just want to give you all different angles that you can look at, and not be stuck to having to think, oh, I have to day trade this, I have to be in and out in so many minutes, I have to scalp. This is great for those of us who have a day job, and we can continue to do this, monitor it just hourly, very briefly. Even if you want to monitor it 15 minutes for a couple of minutes at a time, that's fine, as long as you're not glued to the chart. The idea is not to be glued. The idea is to look at the charts, let the charts tell you what they want to do, and trade according to what they want to do. And when you see divergence, even on the 15 minutes chart with a dip, you're cautious and you are tightening stops or exiting positions, especially on a weekend. This is the time to take profits and run. All right, everyone, take care, and I'll see you in the next video.